Imagine spending years doing everything personal finance experts told you to do. You worked hard, avoided unnecessary debt, built an emergency fund, and watched your savings account grow month after month. Every time you checked your balance, you felt a little more secure, convinced you were moving closer to financial freedom. But what if the very habit that makes you feel safe is quietly keeping you from becoming wealthy? This is the comfort trap. Most people believe that saving money and building wealth are the same thing, but they are not. Saving protects what you already have. Wealth grows what you already own. There's a profound difference. A savings account is designed to preserve capital, not multiply it. The problem isn't that saving is wrong, it's that many people never move beyond it. They spend years celebrating a growing bank balance while ignoring a much more important question. Is my money actually becoming more valuable, or is it simply sitting still? The wealthiest people don't judge money by how much is sitting in an account. They judge it by how much value it creates over time. Every dollar should have a purpose. Some dollars provide safety through an emergency fund. Others should be working, investing, building, and compounding. When every dollar is treated as something to protect forever, money slowly stops being a tool and becomes a trophy. It looks impressive, but it accomplishes very little. The greatest financial risk isn't always making bad decisions. Sometimes it's becoming so comfortable with safe decisions that you never give your money the chance to grow. True financial freedom begins the moment you stop asking, "How much have I saved?" and start asking, "How many of my dollars are working for me while I sleep?" Because in the world of wealth, money that never moves rarely changes the life of the person who owns it. Every month, your bank account tells you the same comforting story. The number is getting bigger, so you assume you're becoming richer. But numbers can be deceptive. Imagine saving nammui, hung do la, and leaving it untouched for years. The balance never goes down, yet when you return to spend it, you discover it buys far less than it once did. You didn't lose money overnight. You lost purchasing power little by little, so slowly that you never noticed. That's what inflation really is. The invisible tax almost no one feels until it's too late. It doesn't steal dollars from your account. It quietly steals what those dollars can do for you. This is why inflation is so dangerous. Our brains react to sudden losses, but almost ignore slow ones. If someone took muifun of your savings today, you'd panic. But if inflation slowly reduced your buying power over the next few years, you'd probably never feel the same urgency, even though the result could be just as costly. Wealthy people understand this difference. They don't measure wealth by the size of their bank balance. They measure it by whether their money continues to grow faster than inflation. The goal isn't simply to save more money, it's to preserve and increase your purchasing power over time. Because the real question isn't, how much money do you have? The real question is, how much of your future can that money still buy? Once you understand that, you stop seeing inflation as an economic term and start recognizing it as one of the greatest hidden forces shaping your financial future. Imagine hiring an employee and paying them a full salary every year, only to have them sit in an empty office doing absolutely nothing. Most people would call that a waste of money. Yet millions of people unknowingly do the exact same thing with their savings. Every dollar you own has a job. It can either sit quietly in a bank account, preserving its value for short-term needs, or it can be deployed into productive assets that generate more money over time. This is the difference between storing capital and deploying capital, and it's one of the biggest mindset shifts separating savers from wealth builders. Saving is where wealth begins, but it is not where wealth grows. Money stored for too long becomes idle. Money invested with purpose becomes productive. The wealthiest people don't view cash as the final destination, they see it as temporary fuel waiting for its next mission. That's why they ask a different question than everyone else. Instead of asking, "Where is my money safest?" they ask, "Where can my money create the most long-term value?" This doesn't mean every dollar should be invested. Cash still has an important role as an emergency fund and for short-term expenses. But once that foundation is secure, every additional dollar should have the opportunity to work instead of waiting. Over time, the gap between idle money and productive money becomes enormous, not because one grows overnight, but because one never stops growing. The people who build lasting wealth understand a simple truth. Your income is limited by the hours you can work, but your capital has the potential to work every hour of every day without ever asking for a paycheck. The moment you stop treating money like something to collect and start treating it like something to deploy, you stop thinking like a saver and begin thinking like an owner. Most people think the biggest financial mistake is losing money. It isn't. The biggest mistake is never giving your money the chance to grow in the first place. Imagine two people each save matrum, hong. Dola one leaves it untouched in a savings account for 20 years. The other gradually invests it in productive assets and allows time to do the heavy lifting. Years later, the difference between them isn't measured by how much they saved, it's measured by how much they allowed time to multiply. This is the hidden cost almost no one sees, opportunity cost. Unlike a market crash or a bad investment, opportunity cost leaves no visible scar. No notification appears on your phone. No bank statement tells you how much wealth you could have created if you had acted earlier. That's why it's so dangerous. Every year you delay isn't just one lost year, it's one less year for compounding to build upon itself. Time is the one financial asset you can never earn back. Wealthy investors understand that perfection is not the goal. Starting is, they know that waiting for the perfect moment often becomes the most expensive decision of all. The greatest fortunes are rarely built by people who always made perfect choices. They're built by people who gave their money enough time to recover from mistakes and continue growing. In the end, the cost you never see is often the one that changes your future the most. Because the money you lose can sometimes be earned again, but the years you never invested are gone forever. Ask an average person why they keep large amounts of cash, and they'll probably say the same thing. It makes me feel safe. Ask a wealthy investor the same question, and you'll hear something different. What is this cash waiting to do? That single question changes everything. Most people treat cash as a destination. Wealthy people treat it as a tool. They understand that cash has an important purpose. It provides flexibility, covers emergencies, and creates opportunities when unexpected situations arise. But they also know that cash is not meant to sit idle forever. Every dollar without a purpose slowly loses its potential. That's why wealthy people give every dollar a job. Some dollars protect them through an emergency fund. Others are invested into productive assets that can generate future income and long-term growth. Their goal isn't to eliminate cash, it's to prevent unnecessary idle cash. This is one of the biggest differences between a saver and an owner. A saver asks, "How much money do I have?" An owner asks, "How many dollars are working for me right now?" Over time, that difference in thinking creates a completely different financial future. Wealth isn't built by holding the most cash. It's built by knowing exactly when cash should stay still and when it should be put to work. Because money is like a team of employees. If every employee spends the day sitting at a desk doing nothing, the business never grows. Your money works the same way. The wealthiest people don't make every dollar feel safe. They make every dollar useful. And that's why, while most people watch their bank balance, the wealthy focus on building assets that continue creating value long after the money has left their account. Most people believe the financial game rewards the people who save the most. But if you look closely, the system rewards something entirely different. It rewards ownership. Think about it. Every day, businesses earn profits, stocks represent ownership in those businesses, real estate can generate rental income, and productive assets continue creating value whether you're awake or asleep. Meanwhile, cash sitting in a bank account does only one thing. It waits. This doesn't mean saving is a mistake. Saving creates stability. But stability alone rarely creates wealth. The financial system was designed so that owners participate in economic growth while savers mainly preserve what they already have. That's why two people earning the same salary can end up with completely different futures. One spends years exchanging time for money and storing the leftovers. The other gradually uses those leftovers to buy assets that begin generating income of their own. Eventually, a powerful shift occurs. Instead of relying only on a paycheck, they start receiving income from businesses, investments, or other productive assets. Their money begins working alongside them, instead of waiting for them. This is the real turning point in wealth building. Financial freedom doesn't happen when you save enough cash. It begins when your assets start producing more income than your effort alone can generate. The goal is not to own money. The goal is to own things that create money. Because in the end, the richest people aren't simply the biggest savers. They're the people who own the engines that keep producing wealth long after they've stopped working. Most people think building wealth is a math problem. In reality, it's a psychology problem. The greatest obstacle to financial success isn't a lack of intelligence, it's the emotions that quietly control your decisions. When the market falls, fear tells you to sell. When prices soar, greed tells you to buy. When your savings account feels safe, your brain convinces you that doing nothing is the smartest choice. But feelings and good financial decisions are often two different things. Our brains evolved to survive immediate danger, not to build wealth over decades. That's why temporary market declines feel like permanent disasters, even though history has repeatedly shown that disciplined investors who stay focused on the long term have often been rewarded over time. The wealthy aren't successful because they can predict the future. They're successful because they refuse to let emotions dictate every decision. They understand that short-term volatility is part of investing, while panic is optional. Instead of reacting to every headline, they follow a plan. Instead of chasing excitement, they value consistency. This is why financial freedom begins long before your bank account changes. It begins the moment your mindset changes. Once you stop asking, "How do I avoid every loss?" and start asking, "How do I make better decisions regardless of my emotions?" you've already taken a step that most people never do. Because in the end, the biggest battle for your wealth is never against the market. It's against the voice in your own mind that mistakes comfort for wisdom and fear for safety. Most people judge their financial future by what happens this month. Wealth builders judge it by what happens over the next 20 years. That's the difference. The average person asks, "What will the market do next week?" The wealthy ask, "Where will this investment likely be after decades of innovation, growth, and compounding?" One mindset chases predictions. The other trusts time. This is why so many people quit investing after a temporary downturn, while long-term builders quietly continue buying. They understand that time is the greatest advantage an investor can own. Markets may rise and fall, but productive businesses continue creating value, and compounding continues working for those who remain patient. The most powerful force in wealth creation isn't finding the perfect investment. It's giving good investments enough time to grow. That's why the richest families rarely become wealthy overnight. They build wealth through years of consistency, not moments of brilliance. Every decade they stay invested allows compounding to accelerate, turning steady progress into extraordinary results. In the end, wealth isn't built by trying to outsmart the market every month. It's built by thinking further into the future than most people are willing to look. Because when you stop measuring success in months and start measuring it in decades, time stops being your biggest limitation and becomes your greatest financial partner. By now, you may think this journey has been about finding better investments, earning higher returns, or escaping inflation. But the biggest transformation was never financial. It was personal. The people who build lasting wealth don't simply change where they put their money. They change the way they see money. Most people see money as something to protect. Wealth builders see it as something to direct. They stop asking, "How much have I saved?" and begin asking, "What is my money building?" That single shift changes every decision that follows. Instead of collecting cash, they accumulate productive assets. Instead of chasing quick wins, they focus on long-term ownership. Instead of reacting to fear, they follow a plan. Their identity changes from consumer to owner, from employee to investor, from protecting the present to building the future. That's why wealth is rarely created by one brilliant investment. It's created by thousands of small decisions made by someone who thinks differently. The truth is, every financial tool has its purpose. Cash provides security. Savings provide stability. Investments pursue growth. Wisdom is knowing when each one should be used. In the end, becoming wealthy isn't about having more money than everyone else. It's about becoming the kind of person who consistently makes decisions that allow wealth to grow. Because the moment your mindset changes, your financial future begins changing with it. And that's the real secret. Most people spend a lifetime searching for not a better investment, but a better way of thinking.